I have no doubt, looking at gold through investment eyes, they will see that it's gone up and they've probably missed it. And they wait for it to come back. It's not an investment. It's not an investment. You know, I mean, the point is that it's not gold going up. It's the dollar going down. And if you can understand that, then you understand that gold is not an investment. It is safety. That's the whole point about it. It is getting out of risk and getting into safety. So price is actually immaterial. I mean, unless you think suddenly there's been an improvement in the outlook for the dollar, in which case, sell gold, buy dollar. But personally, I don't see that. I see this huge, great credit bubble, which is deflating, and it's going to be punctured, and people are going to lose an awful lot of what they think is money.
In today's news recap, BlackRock's Comex likes gold, just not as a hedge against equity market volatility. The world's biggest asset management firm is reiterating its bullish outlook on gold, emphasizing its role as an important diversification tool in 2025. In a commentary published Monday, Russ Kusterick, managing director and portfolio manager of BlackRock's global allocation team, said he expects gold prices to continue rising even as the U.S. dollar and interest rates remain elevated. He added that gold remains well supported as central banks continue purchasing the precious metal and the U.S. government deficit continues to grow. Gold continues to work. Year to date, the precious metal is up 3%, beating stocks. On a one-year basis, gold has gained more than 30%, making it one of the best performing asset classes, he said. Regarding central bank demand, Kusterick said he expects China to remain a dominant player in the marketplace as it diversifies its holdings away from the U.S. dollar. One of the reasons China is buying more gold is that they are buying fewer U.S. treasuries, he said. While much of the shift can be attributed to geopolitical considerations and concerns over U.S. sanctions, nagging questions regarding U.S. fiscal sustainability are a growing consideration, not just for the Chinese, but also for domestic investors. At the same time, Kusterick noted that it doesn't appear the new Trump administration will rein in spending anytime soon. During the past year, the correlation between gold and U.S. equities has been approximately 0.25, indicating that the price of gold and U.S. stocks have a propensity to rise and fall together, he said. For investors, the implication is that, at least in the short term, gold is not an effective way to protect your equity gains. However, as a store of value for the long term, gold continues to make a lot of sense. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Bullion banks in the LBMA, whatever, have said that the reason that gold is running up and you've got these huge, great premiums on futures relative to spot is because Trump might bring in 10% tariffs or 25% tariffs against Canada and Mexico and so on. So there's going to be a shortage of bullion. Now, I don't actually buy that story. I can see some people maybe going into the market and thinking, oh my goodness, we better go and buy some futures to get hold of some gold before this comes in. But I would have thought that actually they're in a minority. Now, that said, I think that it could have triggered something else. And to me, that other thing is probably, and I don't know for certain, but it seems to me this is the most likely candidate, probably the increased pace of stand for deliveries on Comex. The level has actually been very, very high. And I think, we have to bear in mind that the whole point about futures is that, they're not meant to end up in delivery. Futures are a credit market, nothing to do with bullion. I mean, okay, if you've got lots and lots of positions, particularly short positions, then it makes sense, if you like, to have some bullion in the background. So you've got some sort of reserves, etc., etc. But basically, this is a credit market. It is not a physical bullion market. The problem is that for the last, is really since COVID, I think, certainly 2021, I noticed that these stands for deliveries, in other words, people deciding to go for physical settlement rather than closing out an expiring future, these physical demands, as it were, which are known as a stand for delivery, have been increasing and increasing and increasing. So I thought, well, let's have a look and see what the extent of it is. And what I found was that in 2021, we had 602.7 tons of gold stood for delivery. That was actually probably the highest, and that was in the wake of the COVID problem. So really between 21, 22, 23 and 24, there's 4 years. The total amount of gold bullion stood for delivery was 2,113.9 tons. That is an awful lot of gold. And if you look at the silver numbers, the figure there is 25,122 tons. Again, a very, very considerable sum. Since the end of last year, in other words, just going through January and the first few days of February, we've had an acceleration in the rate of stands for deliveries of gold. And that, I think, probably helps explain where the panic is. The reason this is important is that when it comes to getting delivery out of Comex vaults, it's actually very, very difficult to do so. It's a long, protracted process. And not only that, but literally today or yesterday, there was a man who used to work for Sprott was describing what happened when they tried to stand for delivery for silver. And what was meant to be a 5-day settlement actually turned out to be a 9-month hassle with, excuses and excuses and excuses. And, and at one stage they asked for a bar list and nothing came and so on. So it was quite clear that this credit market, was not really in the business of delivering anything. So now that we have, as I said, by the end of December, the last 4 years, over 2,000 tons of gold stood for delivery. The question is, how much of that has actually been delivered?
In today's news recap, central banks buy more than 1,000 tons of gold in 2024 for the third year in a row. World Gold Council. Central banks continue to dominate the gold market, collectively buying more than 1,000 tons of gold in 2024 for the third year in a row, and accounting for roughly 20% of total demand last year. In its annual and fourth quarter gold demand trends report published Wednesday, the World Gold Council said that total physical gold demand rose to 4,974 tons for the year, a record high. The report noted that record demand helped drive gold prices to consecutive all-time highs. Quoting price data from the London Bullion Market Association, the average gold price in the fourth quarter rose to a record high of $2,663 an ounce. The average price for the year rose to $2,386 an ounce, up 23% compared to the average annual price in 2023. The combination of record gold prices and volumes produced a Q4 value of $111 billion. This took 2024 over the line to reach the highest ever annual value of $382 billion. The report said. Along with central bank demand, the report said that investment demand for the yellow metal hit a 4-year high as over-the-counter demand outweighed relatively neutral demand for gold-backed exchange-traded funds. 2024 marked the first year since 2020 in which holdings were essentially unchanged, in contrast to the heavy outflows of the prior 3 years, the analysts said in the report. Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
Now, the experience of Sprott trying to get hold of its silver rather suggests that there is a hell of a backlog of physical which is being stood for delivery. Now, let's sort of it has accelerated in the last, in this year. This year so far, it's been running at a rate of over 2,200 tons for this year. This is, if the current level continues. So this acceleration, I think, is probably the straw that is breaking the camel's back, as it were. Now, let's put that to one side and look at it from the point of view of the people who are standing for delivery. We don't know who they are, but I think it's a reasonable guess to suggest that the majority of them have actually taken out their futures positions and have stood for delivery against those through the Globex facility, which, if you like, is the 24-hour facility outside, outside New York. So you've got all these foreigners who've got this stuff stuck in a Comex warehouse, and they are now agitating to get their stuff out. Why? Because Trump has been elected. They are very concerned about Trump. They're concerned about the future of the dollar. They want physical possession. I mean, the Americans, I mean this most sincerely, as it were, the Americans are not to be trusted as far as the foreigners are concerned. We've had in the past gold confiscation. You just don't trust anything that the Americans say, particularly if you're a Chinese, if you're Russian, if you're, in the global South, BRICS, and so on and so forth, which I would guess quite a lot of these stands for delivery are. So I think that's what's happened. We've got a panic, and this is why they're flying in huge quantities of gold from London. And they've tapped out the London bullion market, and so much so that there is now a 4 to 8 week queue at the Bank of England to withdraw presumably leased gold from the Bank of England. So you can see that there's a real panic on here. And then this morning, Reuters reported, or it might have been overnight, reported that gold has actually been coming out of bonds, as it were, the customs houses in India. Now, this is gold which has not, if you like, cleared through into the domestic market. What happens is that the big consumers of gold will buy bullion, store it, as it were, in a bonded warehouse, under the sort of customs arrangements, not paying tax on it until they have to, when they then import it into the domestic market. Even they, apparently, have been sending gold back into Comex. So you can see that there's a huge shortage of physical gold, presumably because these stands for delivery are now coming home to roost. And that roughly, I think, is where we are. Of course, the other thing to bear in mind is that while the crisis, I think, is in gold, very, very definitely, if you look at the way it's accelerated, the stands for delivery have accelerated in the first month and 2 days of this year. You can see why that's triggered an enormous panic. But gold you can move relatively quickly. That is assuming that you can get it out of the warehouse, which is the other problem. As I said, the Bank of England is taking 4 to 8 weeks, according to the Financial Times, in order to release gold to lessees or an entity which might actually own it. I think with silver, it's a different problem because you can't really air freight silver. I mean, we're looking at, the last 4 years, something like 25,000 tons has stood for delivery. Now, I mean, you can't put that on an aeroplane. That has to be shipped. So you've got an additional factor, I think, when it comes to silver. And I don't think that's quite reflected in the silver price yet. Silver's beginning to move a bit, but you can see that this is, I think in a nutshell, where we are with this, Dunnigan, is I think that we are in the early stages of potentially of a systemic crisis in these markets, in the bullion markets.
And that's Alasdair Macleod's take on the evolving role of gold and the BRICS nations' ambitious plans to challenge the global financial order. What do you think? Do the BRICS nations' master plan for a gold-linked system hold the potential to reshape the global economy, or are the obstacles too great? Let us know your thoughts in the comments below, and don't forget to like and subscribe for more daily recaps. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.